Okay, so as a first home buyer, what benefits can I expect? Let me just say from the outset, as a first home buyer, there are lots of benefits that you can potentially get. Please don't get confused by some of these next slides that I'm going to be putting up. This first slide is, this is the oldest one going around. This is the one that John Howard brought in after when GST first came in July 2000. It's changed a little bit, but it has a background back to the year 2000. So basically, as a first home buyer, if you are buying an established property, for the first, if you're buying a property up to the value of $650,000, you pay no stamp duty. Okay, so that's a saving of about $25,000, quite significant. Okay, so yeah, you say to yourself, okay, what can I buy for $650,000? Well, okay, in Sydney, a 1-bedroom unit, maybe a 2-bedroom unit in the burbs. A house might be a little bit more difficult to buy in Sydney at these price levels. If you spend beyond $800,000, you do not get any form of stamp duty relief at all. Okay, so but between obviously $650,000 and $800,000, there is some kind of stamp duty saving for you, but it is discounted on a sliding scale type basis. So that's what you get if you're buying an established property. Okay, this one, ScoMo brought this one in just very recently. He brought this one in conjunction with the New South Wales government, purely as a reaction to the coronavirus and COVID. And obviously he was trying to get employment and the building industry, making sure that it still stays active. So this particular scheme was brought in beginning of August for a 12-month period only. So it only applies to brand new homes. So if you're looking at buying a brand new property of some description, it's very similar to the previous slide, but the values are slightly different. And that is that you don't pay, on a brand new home, you don't pay any form of stamp duty up to a value of $800,000. Okay, so now you're talking about more significant units or or brand new homes and so forth. So here we've got a saving of about $31,500, quite a good saving to you. If you were to spend over $1 million on a brand new property, and good luck if you can, there is no saving. Okay, and again, there's a bit of a sliding scale between $800,000 and $1 million. Okay, if you're looking at buying a vacant piece of land to then build your future house on, there are some benefits available to you if your land is up to $400,000. Okay, if you are buying brand new, you get the old $10,000 first home buyer's grant, but you only get the $10,000 first home buyer's grant if you're buying a brand new property. Okay, back in the days, many years ago, you used to get the $10,000 for established properties as well. That no longer applies. That rule changed some years ago. Okay. So the criteria to obtain these benefits is pretty consistent around all the various benefits and so forth. So firstly, you've got to be an adult, quite obviously. You can't buy a property unless you're over 18 years of age. You've got to be an Australian citizen or a permanent resident, and you've got to move into the property within the first 12 months and occupy that property for a continual period of 6 months. That is a very, very important criteria. So you don't have to move into the property immediately, but you do have to move into the property within 12 months and continually live there for a 6-month period. Clearly, you can't have owned property before, and your partner or wife, your de facto partner, cannot have owned property previously either. And obviously, you can't have obtained the benefit of the first home buyer's grant previously as well. So that criteria applies across pretty much all of the grant schemes that are available to you. Another scheme that is available, so I did say there's plenty of schemes that are available to you. So it's a question of which one best suits for you, or which one in fact does apply to you. This one came in, this was the first home loan deposit scheme that again ScoMo brought in during the election campaign. And he brought this one in specifically, obviously, to help first home buyers and to help first home buyers avoid lender's mortgage insurance, LMI as it's called. Now, I'll say a couple of things first. In a tick, I'll describe what LMI is and give you an explanation of that. Can I just say one thing about this particular scheme? Annually, there's about 400,000 to 500,000 first home buyers in Australia. This scheme is only applicable to 10,000 first home buyers each year. So what the government did, it released 5,000 spots on the 1st of January. They went in the first few days. In fact, within a week, all those allocations are gone. They released another 5,000 spots on the 1st of July this year. They're already gone. So none of our clients, well, very few of our clients are actually qualifying for this. It is allocated and you've got to take it up within a particular period. So don't get excited. Unfortunately, don't get excited about this particular home loan scheme. I think the government had great intention, but 10,000 scheme allocation was never going to do it for enough people to make it worthwhile. Now, as I said, this scheme was brought in to help first home buyers avoid mortgage insurance. So what is mortgage insurance, you ask? Mortgage insurance is required by all lenders when you borrow more than 80% of the value of the property. Or if you want to go the other way, if your deposit is less than 20%. So what mortgage insurance is, it's so for argument's sake, if you're borrowing 90% and you've got a 10% deposit, in the event of a foreclosure, in other words, okay, let's use an example. If you spend $700,000 on a property and you end up borrowing $630,000, and there is a foreclosure, there's a default situation in terms of, you're not able to make the repayments because you've lost your job, you've had an accident, you don't have any form of other income protection insurances or whatever. Mortgage insurance protects the bank in the event of a foreclosure. So if the bank has to sell the property and they don't get the $700,000, your loan of 630 has blown up to, say, 680, capitalized interest, legal fees, valuation fees, a whole heap of other costs. And when the bank realizes on the property and they don't get the 700, they might get, say, 650 for argument's sake, who knows? That capital loss of $50,000 or $30,000, I should say, is what the bank claims on the mortgage insurance policy, the lender's mortgage insurance policy, LMI. So a lot of first home buyers, because of your, you haven't had the ability to save a lot of money over the times, a lot of first home buyers do need LMI, lender's mortgage insurance. And this scheme was brought in to help you get around that. We'll talk later about how else you can avoid LMI, but this particular scheme was brought in by ScoMo to assist first home buyers avoid LMI. Don't get excited about it is really all I'll say, but we will click on a little bit more on LMI in a tick. Okay, so let's go through a bit of an example, okay, in terms of how this could potentially work for you in terms of you buying a property. And we're going to use an example of a $700,000 purchase. Now, are you looking at spending $700,000? I don't know. We're just going to give you a bit of a rundown, a bit of an example. So the first benefit you'll get, as you saw from one of the previous slides, is that you don't pay the standard stamp duty of $26,000 or $27,000 in this particular case. You're going to get you're only paying discounted stamp duty of about $10,500. So there's a very, very significant saving to you. $16,000 saving in stamp duty if you're a first home buyer. Now remember, if you're spending less than $650, you in fact don't pay any stamp duty at all. Okay, saving about $25,000 again. And if you spend more than $800,000, you pay the full freight in terms of the stamp duty. So now the legal costs and other costs, standard costs apply whether you're a first home buyer or otherwise. So if you're spending $700,000 as a first home buyer, you'll have to come up with about $712,000 all told to meet the various the costs of the buying the property and also the stamp duty costs and so forth. For the purpose of this exercise, I am going to assume that you are borrowing the maximum amount available, which is 95%. So the most the banks will lend you is 95%. So that means that you have to have a 5% deposit, okay? So in this case, you'll need a deposit, 5% being $35,000. Okay. And we talked about LMI. There is a slight discount on LMI to first home buyers of about $1,000. Okay. So, so your contribution effectively, if you're spending $700,000, is that you need to come up with about $72,000. But you can see that ordinarily that's still a saving, because ordinarily that's a cost to you of about $89,000. So simplistically, the way to work this out in terms of trying to work out how much you need to come up with, 5% deposit is what you need to come up with. You need to cover the costs, stamp duty and so forth. And you may have to come up with some mortgage insurance, just depends. The banks will lend up to 95% inclusive of the mortgage insurance premium. So as an example, if you're only borrowing 85 or 90%, you can actually capitalize the cost of the mortgage insurance onto the loan, so you're not paying for it. You're not paying for it up front is really what I'm getting at. So as a minimum, you need to come up with a 5% deposit plus the stamp duty costs and maybe some mortgage insurance as well, okay? This example does assume that you're not buying a brand new property, therefore you're not getting a $10,000 grant. But still, as I said before, you are saving $17,000. So that is quite a significant saving for you as a first home buyer.